YouTube, it's Louis here. What a crazy day today is. Of course, in the last few days I've been telling you about this ascending support over here which we've been holding, and we were accumulating here for a few days. But because we were under these EMAs, I was telling you guys, if we were to ever close below 19.6, you're going to 18.6. And this is our last final layer of defense. So this is why, because it's our last layer of defense, you should anticipate reaction. This is what we're seeing at the moment. But of course, this reaction is not confirmed. We've still got 11 hours left of today's candle. And so we need to wait until the end of that. So we need to come back to the chart in 11 hours time tonight or whatever. Yeah, it's 1 a.m. here. So tomorrow for me. But yeah, if you do see Bitcoin closing below 18.6K, that is signaling the bottom is not in. At the moment, you can see we did go below. We went as low as 18,271. However, if you're not closing below 18.6K, then this is just a rejection from here, just like you're rejecting this. Can you see this big brick red wall over here? You see how you pumped into it and you were above it. However, you didn't close above it. Because you didn't close above it, you went down. So if we close above this, you're not going to go, sorry, because you didn't close above it, you didn't go up, you go down. So same here, if you don't close below it, you're not going down, you should go up. However, the top, now this support has now flipped into resistance. So it's key that we actually reclaim it like this. You can see the 20 and the 12 EMA is key resistance over here. So going forward, if you see a rejection, two things. If you just close below, we're going down. Otherwise, if we close above, there's still the risk we go down. If you flip this purple area where the two EMAs will land in and around here, if you come up into here, fail to close above it, start and then close below this again, yeah, we're going to start to head lower. However, if we can now reclaim this 19,666, the previous all-time high, and confirm it as support, then that's good for continuation. This was a bear trap. But again, guys, as long as we're holding this green box, which I told you about last week, we're still holding this as support. The bottom is still in. I'm not going to change that. Only once we close below, then we're going lower. Even this morning on Twitter, I think we were down here. I was telling you guys, now that we close below 19,666, we're heading towards 18.6K. And so this is our final layer of defense. And if it doesn't hold, the bottom is not in. So pretty much not more to say other than look, what are the targets for this potential downside? Well, there was this massive descending triangle down to 10K. We also have a head and shoulders pattern over here. Shoulder, head, shoulder. This pattern's technical target is 14K, the 1618, as well as the 2414. Now, we did not need the descending triangle and the head and shoulders for many months now. We did, since this low, we've been saying the bottom is in. As long as we're above 18.6K, the bottom is in. So that's why as we're going up, I'm telling you guys the bottom is in. And when we saw these M patterns, I said, of course, the bottom is still in, but even though I'm going to continuously tell you the bottom is in, it doesn't mean we can't come down. We have a target now at 18.6K. We went all the way down to 18.6K. Then because this is the bottom, this is support, you should bounce. Then we pumped into resistance. I told you guys, this is resistance. Now we're going to head lower. We're going to come back to here. This is where I want to find support. We came down to there. We waited here for a few days. I said, guys, we want to continuously see this as support and head back up and break above this. However, if you lose 19,666, you're going back down to 18.6K. So nothing here that has happened on the channel is out of the ordinary, is, you know, unexplained. Like, we've prepared for it, basically. We're not getting caught off guard, essentially, because we've always prepared for all the scenarios. And yes, as I've said, even though we were coming down here and I told you we have a target down here, I was still remaining bullish because, guys, this is how trading is. This is how the market works. If you're not breaking below this, you're bullish. The moment you break it, we switch because we've been preparing for that. At the moment, we have to say we're bullish because no one can show me lower lows. People were trolling on Twitter today saying, haha, told you so, or whatever. But there's nothing here to say, I told you so. We need to wait 11 hours. And then you can say, oh, I told you so. But in actual fact, guys, if you've been listening to the videos, and I know most of you are, so well done to you guys. Thank you for supporting the channel, liking, commenting, subscribing, sharing the videos. There's so many of you. Thank you so much. But yeah, these people that have been supporting, that have been using their ears, would know I say as long as we're above 18.6K, we're bullish. But if we close below it, we're bearish. It's first target 16k. But we do actually have a head and shoulders patterns target down at the 1618 here, 14,000, and the 2414 at 10.6k, which is the wave one high, which we spoke about many months ago. As this is the level, at all costs, we can't afford to see a monthly close below. Otherwise, you invalidate this wave one high over here, this close over here. You can see the perfect touch of resistance, as support, previous resistance, and then we went 6 months of straight just up. Then we lost this support. That's why we're capitulating right now, holding the monthly previous all-time high, 19,666. And if you do see a close in 11 days below this, then yeah, that's going to signal some continuation down. Okay, if you see a monthly close in 11 days and 11 hours below 19,666, we know what's going on. Basically, we're going to head down to these lower targets. If we're reclaiming this in the next 11 days and 11 hours, that is beautiful, because it's telling me that you've held it for not 1 month, 2 months, 3 months, but 4 months. But at the moment, on this 4th month, it looks like for the moment you've lost support. You're flipping this resistance into support. However, you cannot get overexcited yet. You have to wait for the monthly close. So very interesting day, but also very interesting monthly close. Okay, so let's wait for this daily close. I'm going to go to the weekly. We haven't spoken about it just yet, but this is another week that's gone by where this indicator, if you guys remember, this indicator signals that this capitulation here is the higher low. So if the data is right, and nothing on this channel has been driven by my emotions, right? Because I've been clearly explaining, as long as we're above 18.6k, this is bullish, because once we bottomed out 17 and a bit, your higher low was at 18.6k. So to keep these, higher lows, this uptrend structure, you need to stay above 18.6k. So this is why even when up at 25k, I said, guys, now there's 2 ugly M patterns. I'm going on holiday, but break this neckline. You're going to validate the smaller M patterns target to the larger M patterns neckline. Break below the larger M patterns neckline. You're going to 18.5, 18.6k. We did it. But even though I told you guys, yes, we're going down from 25 to 18, I constantly said I'm bullish, because even though we're coming down, you're still above that low. So it's as simple as that. If you lose that low, you're no longer bullish. I'll constantly tell you guys, we're not bullish, we're not bullish, we're not bullish. As simple as that. But yeah, looking at the weekly, you can see this crossover, this blue line over the orange signals. Once this crosses over, it signals the capitulation over here is a higher low. It means that this was the bottom, and we can see that over here. When it crossed over, this was the bottom. It crossed over, and that was already over here. And one more example in the past where it crossed over right there. This capitulation started happening, but it actually ended higher than this low. So each time I've shown you in the past, when that crossover has happened, you do fall down, but you don't fall down lower than the low you already had, meaning that when it crosses over, that is actually a higher low. So this is why going forward, if the data is right and everything on the channel is proven by data, that is not emotion. What I've just shown you is not emotion. So I don't know why people constantly think it's all emotional. But yeah, that right there is just proving that the past, it's panned out before. That was once currently happening. You didn't have the chart going up to the right, so you had to go off what is just there in front of you. Of course, right now it might not look like a bottom, but I can go back to all these previous examples over here. Look when it crossed over right there. I take that away. I take the crossover away. Take the EMAs away. You guys are looking at this, looking like, yeah, it's definitely. How is this an uptrend? How is this going up? Show me how this is going up. Please explain, because when I look at this, I'm only expecting further downside. I'm looking at this low over here. I'm looking at 1. Okay, if we lose this, we're going to 1.8k. If we lose 1.8k, we're going to in and around 1.1 to in and around 750 to 800 as key support over there. So that's what the chart looks like at that moment. But you randomly get these crazy pumps. Like, you can't call that, because we're in a downtrend. There's no light at the end of the tunnel, because we're just manipulated down and down and down, suppressed down and down and down. That is the whole point, guys. If you appreciate the video, smash the like button. Road to 5k is on, so let's get there as quick as possible, and share this video. Of course, leave a comment if you found value. But yeah, How can you find any light in the tunnel here? Look, this is correctively coming up. Look, you've got a big resistance here. Even if I do turn on the EMAs, this white line is the 200 weekly EMA. EMA is better than MA because it's leading. And then this is the weekly time frame, one of the most accurate. And not only that, this is taking the last 200 weeks and making an average. And you can see a massive rejection right there, while under this EMA, and that is the biggest bearish signal in the world. And then what happens is you just skyrocket. There you go. So nothing was telling us this should go up, but it happened. So when we're in a bull market, there's no signal as we're at the top over here. So now let's go back to here. Okay, what is your signal? Oh, I'm gonna have to go one more candle. Yeah, what is your signal right here? Oh, it's a few more. Sorry, my apologies. There we go. So yeah, what's telling you right there? This is the candle that is the final candle that's going up. What can prove that this is the final green candle, that you're gonna go into a bear market that goes all the way down to 3.8k? How do you know that from this point? You don't. So this is what I mean. There's no, in this case, nothing could warn us at this very point. So this is my point, guys. How can we get warned if something that needs to change the trend is an unexpected event? So we need to wait for this, in this case, this unexpected pump, just like here, just like down here. When we go back to the bar replay, how could you tell from down here we were going up? You can't. So it's the same thing. Look at that. That looks absolutely godly awful. And then look, 2 retests of the 200 weekly, and then we had that further one a few weeks later over here. That right there, that's an awful candle. That right there is an awful candle. Biggest bear signal. So it's the same thing going forward. We're seeing all these nasty signals. But again, even though you might get these very ugly candles as we've seen over here, is that candle below this low and this low? No. So it's not a lower low. It's a lower high, correct? This high is lower than this, but then you need to actually confirm that with the lower low. So you need to close below this to say, yeah, we're going to here. Yeah, we're going to here. Not that we're going to go below, but you need to close below this to say we're going down to here. Without closing below this, you're not going down to here. So even with that ugly ass candle there, the shooting star of the 200 weekly and the 12 weekly, very, very key resistances, you can see you did not manage to put a lower low. So even with that nasty bearish signal, you didn't make the lower low. Here, I want to see the lower low, a close below that wick on the daily, on the weekly, and I want to look at that monthly close as well. If we're closing below the previous all-time high on the monthly, then I know we are going down lower to these targets that I've warned about in the past, being the 1618, the 2414, but now we actually have further reasonings why these could be targets, with the head and shoulders on the daily time frame, shoulder, head, shoulder. But not only that, this larger descending triangle. Do not forget, if we do not close below 18.6k, these are not happening. And so if we were actually to hold 18.6k, this is again a higher low. And so if we were to actually start creeping back up and breaking above this descending resistance, we could be validating a potential inverse head and shoulders here. But a lot to do, guys. The first step, hold 18.6k, lose it, we know what's going to happen. Hold it as support, break above these key resistances, and wow, we've got an amazing target back up to around 28k. But for now, yeah, it's all the focus on the daily close, weekly close, and the monthly close. It's all about this September. Thank you, guys.